Odayo, I want to thank you for joining us on today's podcast. Really, really good to see you. We've been fans of PiggyVest for a long time, pioneering savings company in Nigeria. I was wondering if you could maybe start by explaining a little bit about what PiggyVest does and how you got started.
Right. Thank you so much for having me. It's great to be here. We started PiggyVest in 2016, and it was essentially an answer to a gap that we found in the savings infrastructure here in Nigeria. So we realized that more people should be doing it. We're actually looking towards saving into actual wooden boxes. People were making and keeping wooden boxes in their homes and putting money there. And this is despite the fact that the average young person in Nigeria has 2 bank accounts. So there was obviously something missing. And so we decided that we were going to create a digital form of that wooden box. And that's how PiggyVest was born. It was initially called Piggybank, which is just the English word for the box. And so what we started to do was just automate like saving of little amounts of money daily, weekly, or monthly towards a target for people. Of course, it's now grown into offering different micro versions of financial services from savings to investments. But that was how we started, just helping young people put aside very little amounts of money in frequencies that they control.
That's incredible. And it was so early in the history of fintech in Nigeria. I heard a good story about how you actually had the idea, something about a New Year's resolution.
Yeah.
Is that right? You want to tell that story?
Almost. So on December 31st, 2015, there was a lady who had saved 1,000 naira every day in a box all through that year. And then she broke the box. She had 365,000. She put it on Twitter, and then the tweet went viral. And my co-founder saw it and then brought that tweet to our group chat. And that was how we started to talk about the idea.
And just a little bit about your background. What were you doing at the time?
Well, I graduated computer engineering in 2013 and just immediately started working in tech as an entrepreneur. So at the time we were working on other startups. So we had worked on from 2013 to the moment where we got the idea for PiggyVest. We're working on a startup called Push CV, which was in the HR space. And in that time as well, we had tried our hand at several other startups, maybe like 5, and 4 of them had failed. It was like really well.
Wow. So how did you have the endurance to start 5 startups? I mean, it can be really, really frustrating. Usually after people have one failed startup or one struggling startup, they go find a job in the corporate world. But I mean, you had the endurance to start 5 startups.
Well, for one thing, I don't like to dress corporately, so the corporate world held zero attraction.
Okay.
I knew that I just wasn't going to fit in there. But the other thing was that I didn't think I had a choice, in that in 2013, I had deferred my admission and deferred it again in 2014. And so I'd lost the admission for my master's degree. So this was like what I had to do, and I had to make it work because I told my parents it would work.
And I don't know, did you learn a lot about what makes a startup work during that time and what makes it fail?
Yes, actually, for every startup that we started and that failed, there was a very pretty obvious standout lesson that we've then gone on to use or avoid in PiggyVest, right? For instance, we had one startup called 500 Dishes, and it was essentially bulk food delivery, which is now a huge thing on the internet in Nigeria, but just wasn't in 2015. So we learned a lot about right place, right time, right idea. We learned a lot about sustainable business models. We learned a lot about profit margins and how you needed to make them wide enough to make the business continue running. We learned a lot about target markets, segmenting, understanding when something is repeat business and when it's not. And so when we started PiggyVest, this arsenal of losses and what basically became the secret weapon for going into PiggyVest, even though we essentially still approach PiggyVest as an experiment, but we had all of those things at first in our subconscious, then later in our conscious, that we had to avoid all these pitfalls.
Mm. Yeah, I remember seeing the app. I've been, spending a lot of time in Nigeria for the past 5 years, and I remember seeing the app right after it launched, and I thought, oh, that's interesting, and it just had a few downloads, and I didn't think much of it. And
Oh
then I
yeah.
checked in. I checked in a few months later, or maybe 6 months later, and then wow, it was everywhere. Everyone was doing it. So it didn't seem like it was like a immediate hit, but it seems like something you did in the first year or two turned it around pretty fast. What happened?
Well, I mean, you're right. It definitely was not an immediate hit. It was really slow at first, and I think it was first of all like everyone is like, yeah, this isn't going to work. The banks are going to kill you. So there was that. Then there was the fact that we had no money just because everyone thought the banks were going to kill us. So we
Yeah.
had to focus on growing it via organic social media, right? So essentially it was myself and my co-founders in front of laptops coming up with like interesting tweets to drive clicks. And then so what my co-founder then did was he took the platform to one of the guys who was retailing the actual wooden boxes in January of 2016 and told him to try it out. That guy tried it out, signed up, started using the platform, and then word started to spread. It was one after the other. Then it became 5 people telling other 5 people. Then it became people with large platforms talking about how they've tested it without us having to pay anything. So at the point when it must have boomed, which I think maybe the time you're talking about, is when someone who hosts a radio show on one of the popular radio stations, we didn't even know he'd been using the platform, but he'd used it from possibly the second month. And about 7 months after, he withdrew his funds and it was instant. And he went straight to his Twitter and just told everybody. And that was
It
like a
works.
one-to-one. Yeah, exactly. And also gave us our marketing like strategy.
Yeah, yeah. I think a lot of savings apps, especially in the US, have failed because what I would call the eating broccoli problem, meaning it's healthy, it's a healthy behavior, just like broccoli. And
Yeah.
oftentimes, especially on mobile apps, it's hard to convince somebody to do something that involves long-term planning or health. And
Yeah.
unfortunately, a lot of the things that get popular are like junk food, unpopular, unhealthy
Yeah.
activities. So it's incredible that
Yeah.
you convinced millions of people to do something that's good for themselves, especially with their phone. You know, so kudos to you. Do you think is it the return? Is it the high yields that really get people hooked, or how do you get people to do something responsible?
Honestly, I think I don't think it's the returns because we certainly don't offer the highest returns on the market. And I think
Mm,
that it was just like, again, right place, right time, the right
yeah,
idea. At the time we launched for the first, and then we had this name that was Piggy Bank and just like easy to remember, easy to relate to. And it was so different than anything that existed at the time. And also, you just mentioned a very key part. We didn't ask people to do it for a long time. We asked them to do it for 90 days at a time.
oh, okay,
So
short
that
short
was
periods.
very, very, so you had the choice to do it for only 90 days and then renew or not. And so what
Hmm.
people started to discover was if it's easy to do it for 90 days, then you can do it for 180. If you can do it for 180, you can do it for a year. And then there's people who are saving on the platform now for 2 years, for 3 years. And
They
so
work their
that's
way
kind
up.
of how, especially when like we as of 2016, Nigeria had really, really poor savings culture. And so you try to change their habits very little steps at a time. And a very key perspective was we basically did what we as individuals would do because we are in the target market that we're servicing. So
Okay,
I
serving
I wouldn't
yourself.
have lived activity safe for a year exactly.
Amazing. Yeah, just for an American audience, can you explain the yields? I mean, the yields are high for at least compared to what you get in the US. It sounds shockingly high, above 10%. So what are the yields
Yeah.
and how do you offer those?
Well, I mean, we offer anywhere from 10 to 13% on the savings plans that we control, and then on the discretionary investment marketplace, you can get up to 25% a year, depending on
Wow.
which your risk appetite and what you choose to invest in. But the returns are that high just because compared to the US, Nigeria does have higher inflation rate. And so
Hmm.
for any investment to be worth it, it has to be higher or at least slightly on par with the inflation rate to make sure people are not losing out on their money. So Nigeria has, well, it's much higher now, but it has like above 10% inflation rate, which means that we have to help people manage their funds properly by offering those high rates.
Incredible. It sounds too good to be true for an American at least. And is it guaranteed? I mean, if I'm trying to get 10, 12, 15%, is that insured, that return, or is that like an investment in a stock or Bitcoin or something that I might lose my money?
Oh, so we, as a company, we only invest our users' funds in low to zero risk instruments. So bills, bonds, commercial papers, and debt
Okay.
notes that are on some level guaranteed either by the government or by another third party that has enough of an asset base to make sure that funds are not lost, right? So at some point, as the company grows, we will probably diversify into riskier assets, but for now, we're very, very much on the side of risk-free.
And you mentioned there was a man selling wooden boxes. Uh, why were
Yeah.
people using wooden boxes when they can get yields? Were banks not offering this? I mean, it seems like a
Oh,
no-brainer.
yeah.
Why, before PiggyVest, why weren't people getting 12% from their bank?
Yeah, that's a really good question. And the simple answer is that banks were not and are not offering it. At no point have they like given up to those returns to anyone. Right.
Hmm.
And I think that's really important as a motivation. One of the things that we noticed in 2016 was that if you look at Nigeria, right, the World Bank would tell you that about half of the country lives in extreme poverty. So there is like a lot more to be done on that side of the country. But even the side of the country that doesn't live in poverty is struggling, right?
Hmm.
More than 80% of those people must save 40% of their monthly income to be able to meet up with any responsibility at all, right? And if you look at our rent, we pay a year or 2 years in advance. And like earning compared to your expenses is just not the best ratio. So what you
Hmm.
need is infrastructure that encourages saving. In 2016, it just didn't exist. If you open a bank account, you got your withdrawal slip, you got your ATM cards, all of which are designed to encourage taking money out, especially
Hmm.
because like a lot of traditional institutions make money from the transactional movement of money. So that
Yeah,
it just wasn't there, and
they're
didn't feel like
motivating
they
you
had
to
enough.
withdraw.
Exactly. Or inhibition, really. So we created PiggyVest and said, every 90 days you can withdraw for free. Outside of those 90 days, we will charge you an early withdrawal penalty. And
Okay.
everyone was like, this will never work. But it did, because it turns out people were looking for just something a little, just something slightly hard to like touch their funds where they keep it. And so that's why I think it resonated so much at the time.
That's amazing. It's like you took away a feature and that made it more popular. Like you made it harder for people to withdraw money, and people like that. People want the inhibition on their freedom, which is very counterintuitive.
How have banks responded?
Well, initially they just kind of ignored us. We just like, yeah, you guys are going to go away soon. And then later it became, we're going to fight you guys. And then like there was this onslaught of bank sponsored like fintech products. And now I think we've all kind of arrived at a place where we realize that we're probably going to have to work together and be complementary. Fintech has the required technology and desired speed and flexibility. Banks have the asset base and significantly better knowledge of regulation. So I think that, yeah, probably going to work together at some point. We're just getting there, but the ecosystem is still young.
And the trust issue that you mentioned, people trusting the service. Uh, what else helped support that? Because when we look at models around savings worldwide, especially kind of upstart fintech models, trust seems to be kind of at the top of the list for a lot of folks of, kind of what inhibits them from working with perhaps just a better yielding, more convenient service that's digital over kind of, established options in the market, however, you know, uh, inconvenient they might be.
Right. So, I mean, the trust thing we had to like earn from scratch. So, and it was very, very hard one because it went from that's one of the reasons why our marketing strategy is mostly like peer-to-peer recommendations and referrals. Because we figure that as a fintech company in a country that like smartphone penetration isn't as high as you'd like it to be, the best place for people to get their recommendations from you will be from other people that they trust instead of spending money on ads and billboards and all other forms of marketing. So we have essentially turned our users into the ambassadors of the product. And for us, that's the most important thing. So we focus really very, very much on customer support and sustaining the ease and transparency that were the hallmarks of the product from scratch. So any moves that we're making, we're carrying the users along. When we change our name, when we change our rates, when we're revamping or closing the product, or for I can give you a small example is there is a product on the platform called the Flex Dollar, and typically people should be able to withdraw those dollars into their bank accounts. And during COVID, for instance, we had to suspend it. And everyone was like, you can just suspend it and put we'll be back soon. But I told people that we have to tell them this is why we are suspending it so that they understand that we don't take these decisions lightly. And so it's things like that that we think engender that trust. And I think it's also helped by the fact that us as the founders are people that they can pretty much have a chat with on Twitter whenever. And it helps that we're very visible. We're like we really try to build a human brand, one whose entire vibe is we're just your friends who slightly know about money and who can help you with financial management. But it's not like a from the top looking down like most traditional institutions have built so far.
Where do you want to go? What additional features, what additional services would you like to offer? I mean, it's such a wonderful platform where over 1 million people now are saving and using your services, real wealth building products. What's next?
Well, we're looking very much. So we started with savings, with micro savings, and now we have an investment marketplace that focuses on micro investments. So essentially, we're looking at financial services from the point of view of access and affordability. What can we give to young people that they were previously not able to access, and how can we make it bite-sized so they can afford it? So the first thing we naturally think about now after saving and investment is insurance. If you, in Nigeria, only 2% of the whole population is insured. And that's very, very disturbing when you think about how much infrastructure we do not have. So we're looking at what are the kinds of insurances that are immediate needs for young people, and how can we break it down with the help of existing institutions. And then we're also very, very, very critically looking at the cryptocurrency space and how we can make it accessible to the layman as well. Another thing that we're looking at is obviously peer-to-peer sending of funds between our users. So we're looking at those three things specifically: insurance, cryptocurrency, and then peer-to-peer. At some point, we'll probably like take a very good look at remittance, but that space is kind of full at the moment.
And I don't know, when you raise money, maybe VCs want you to work in every country in Africa. Do you plan to expand to other countries?
We do plan to expand to other countries, but I think that the way people look at investments needs to be slightly different. I'm sorry, expansion needs to be slightly different. So investment expansion to me, is more a where can we expand to and get the deepest and like largest foothold. And naturally people would say, so when are you going to Ghana? When are you going to, Kenya and things like that? But I really am still wondering from a research perspective if that's the right move, or if you look to Latin America, for instance, and look at a country that closely mirrors Nigeria and that is enabling, and wonder if you can pilot there. So instead of just planting the tents in the next country and the next country, I want to look at the country whose market is big and as ripe as Nigeria and see if that's where we go next. But still early stages. we're just at about maybe 2 million people in Nigeria, and there's still maybe 20 million more to kind of capture.
Oh,
How
great.
many,
Okay.
what companies do you look at worldwide that serve as inspirations for PiggyVest?
Wealthfront, very much. And then ING Direct. I love those two companies. I think that what they're doing, especially Wealthfront as a digital asset manager, that's exactly what we hope to be. So,
Any words of advice to other fintech entrepreneurs out there just getting started, looking for user traction, trying to build trust beyond what you've shared?
well, I don't know if like my advice is worth taking or anything, but I usually would advise people to just be unconventional in their thinking. All the well-worn roads, like, they always lead to the same place, and you typically want very different results than the people you're trying to disrupt, than the incumbents. So just think a little different. It always helps. It's helped us. So,
All right. Well, I think we're bumping up onto the half hour, and that was a great chat. Okay.
Thank you.
so much.
See ya. Thanks a lot.
All right. Bye.
Bye.